Welcome to Market Movers. I'm Jim Urio, and today we're talking about some important developments in the ongoing Brexit negotiations. Now, it's been almost 2 years since that fateful day, and today we're looking at using CME Euro options 6E as a way to hedge risk or create exposure as additional events unfold in the coming weeks. Joining me is Chief Investment Officer of Kingsway Asset Management, Scott Martin.
Hi, Jim.
The negotiation has got down to the fish. There's protests about the fish.
Is there something wrong with that? You're saying that that's not a serious subject?
No, it is a serious subject, but when it gets down to that and they still can't agree, is this ever going to really happen?
No, it's not, which shows you that they're probably out of things to argue about or out of things to be serious about, Jim. And that's really the interesting thing here is if you look at how these negotiations have gone, all these fits and starts, let's say, to the exit, are we done with this by now? Can we just move on, let's say?
Okay, so now over the last, let's call it year, we've seen strength in both the pound sterling and the euro contract, the euro currency. Do you think that's a function of what's going on there, that we're less worried about it, or is it just a function of a weakening dollar here?
I think it's both. I think it's the less worrisome notion of the Brexit event, but I think it is also the dollar. I mean, look what happened to the dollar last year. It got smoked pretty bad after rallying, mind you, just quickly post-election. So to me, the dollar's pullback is really explaining a lot of the currency moves around the world.
I think it's both, too. I think that the people are realizing that now we're saying March 29th of 2019 is when the process of Brexit's going to begin. I still say no. I still say something's going to come up in that, and they're going to keep pushing it. Now, before we dive into our trade discussions, I'd like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to either manage risk or create additional trade opportunities, not as recommendations or advice. Prices and movements will vary in the markets. Right now, the underlying in the June euro currency contract was 1.237. Scott.
So you mentioned it, Jim. The 6E has been a fun contract to watch in the last several months, quarters, as all these things have happened. And to me, I think the 6E euro is an interesting one to look at going forward. Just looking at the charts and looking at some of the levels that I think have come into play, Jim, as different events have transpired, both in the US dollar and overseas. So specifically, Jim, today, I'm looking at buying the 122 half, 122 even put spread for 15 ticks. It expires on May 4th, has an underlying, as you mentioned, at 123.7, one spot 23.7, and it risks 188 that you put out to make the potential 437 if the put spread fills out. Now, why did I pick those trade levels? Well, if you look at the charts in the last, say, 6 months, that 122 level seems to be some pretty good support. So I believe that somewhere around there you could see a nice put spread fill out. That's why I wanted to express myself to the downside there.
I'm not in the same direction as you. I like the way you're expressing it because I think the risk reward is there. I don't like to think that our U.S. dollar is going to go any lower, particularly because we have
I don't either. But
economy,
what a sad story.
So yeah, that's why I'm the opposite side. But I like what you're doing there. But I'm looking at it a different way. I'm looking at the same contract, the same expiry, the 126.50, 127.50 call spread for 13 ticks. Also expires May 4th. Currently the underlying is 1.2374, and it risks $162 to make a potential $1,087. So again, this may not happen, but if it does happen, the risk reward is pretty substantial.
It is, and I like your expression there just because I like some of those. I wouldn't call them a moonshot, but I like some of those that seem a little bit further out of possibility because, again, you can manage those trades, and if you like where it's going, you can always take some of it off. I just think what we've seen too, Jim, from, say, the Fed speak today, to me, it still feels like we're going to see the dollar maybe continue to get some footing here. Therefore, I expect pressure on currencies worldwide.
That's interesting. Part of the reason I picked this was technical as well. Over the last couple weeks, both the euro and the sterling have been trading kind of sideways. To me, when they resolve that corrective phase, it seems like it's more the direction they came in, which was higher. Thoughts on that?
No, I think that's very true. And also look at some of the economic data that's out there. We've had mixed data, more or less, in the U.S. in the last, say, couple months. Data in Europe has been so-so. That may be another reason that the currency weakens.
By the time Brexit happens, you and I will both be in the old folks' home. Thanks for joining us on Market Movers. I'm Jim Urio, where we're hoping to make you a better trader.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.